Hello and welcome to this presentation of the 3 key elements of our most consistent strategy. Welcome everyone. My name is Stephen Primo. I am the president and founder of Specialist Trading. I have been trading for nearly 37 years. I'm a professional trader. I make my living by trading. And our website is an educational website where we take everything that I've accumulated in my 37 years and hopefully we can shorten your learning curve so that you won't have to be trading that long to get on the level of consistency that we hope we can get you to. Now, we're going to be talking about the 3 key elements to one of our most consistent strategies. That's strategy number 4, and I'm going to go over these key elements and show you how you can apply them either to your own strategy that you feel comfortable with right now and show you how they really make up the most important components of our most consistent strategy. But before we begin, as always, we're required to show you our disclaimer. So I ask that you please take a moment to view our disclaimer. I'm going to give you a lot of performance results with these 3 key elements, but please remember that we can in no way guarantee that any of the performance I'm about to show you will be repeated in the future. So as you're taking a moment to view our disclaimer, I'd also like to mention, as always, that if you happen to have any questions, please kindly write them down or try to remember them. And we'll take them at the very last portion of this presentation. I see we have a lot of people in class today, and I want to get through a lot of very important information that you can start using, once again, as early as tomorrow. And if we happen to stop for each and every question, we won't get through it very quickly. So if you wait many times, your question will be answered probably in the next slide or 2. So if you happen to have a question, just write it down. I promise I will get to it at the very end. And if you happen to come up with a question once we've concluded, I will leave you with an email address as well as a phone number where you can contact us and ask us questions as well. Okay? So once again, just wait till the very end of class to ask any questions. Now, many times I've made no secret about this. I speak about how my trading was on the floor of the exchange. I started out as a specialist on the floor of the Pacific Stock Exchange. And contrary to what a lot of people believe, not all specialists had a license to steal. In fact, I had a very difficult time trading my first 1 or 2 years as a specialist. So it wasn't until I came in contact with a few elite floor traders that they were able to be my mentors and turn my way of thinking around. And they taught me how to trade with the specialist edge. And that was the edge that got my trading on the road to consistency. I'm not going to sit here and telling you that it got my trading on the road to becoming a multimillionaire overnight, because that's not what we're all about. Really what success is being able to be consistent, because consistent will make you trade 20, 30, 40 years down the road. So that's what we're trying to instill in all of our members and all the people in our presentations, is that the specialist edge is rooted in simplicity, and hopefully the goal is to teach you to trade with the specialist edge, which will get you on that road to consistency. I don't care how many webinars you attend from different educators and different websites. If they're promising you the world, you should be very, very apprehensive about jumping in with both feet, because I've known tons of traders who made hundreds of thousands, if not millions of dollars in a very, very short time. And I can honestly say that the majority of them, 99.9% of those traders, aren't trading anymore. They're totally wiped out their account. So that's not what the goal is. Along the way, you will have some very, very nice gains in your trading, but we're more concerned about getting you to be consistent. Consistency has been what sustained me for 37 years now. And that's what we want. We want to be able to continue trading for our entire lifetime if we choose to. Okay? So that's what my goal is, to teach you how to trade with this specialist edge, which is main goal is really to get you consistent. All right, so here's what you're going to learn today. I'm going to tell you about these 3 keys. First of all, this first key will get you to trade in sync with the market, extremely simple. The second key will be a price bar pattern, which will hopefully get you on the right track for entering with a high probability entry, with a third key, which is our entry technique. But please remember that all of these techniques are the main components to probably one of our most consistent strategies, which is strategy number 4. So this is what I'm going to be talking about later on in the presentation. I'll show you some actual signals, some recent and current signals that were generated using these 3 keys along with strategy number 4. Once again, if you happen to have any questions, kindly wait till the very end of today's class, and then I promise I'll answer each and every one. But just wait till the very end. I see some people may have entered a little bit late. All right, so let's first talk about the keys. Let's look at buys, and this looks very familiar to a lot of people. Key number 1, you must trade in sync with the trend. I know you've heard this 1,000,001 times. In fact, when I first started trading, I traded the exact opposite. I was always trying to pick tops and bottoms. And it would work 9 times out of 10, but the 10th time, as you've heard me say a million times before, I would give everything back. And so there was no consistency in my trading. My P&L looked like a roller coaster going straight up and then straight down. And I had nothing to show for all my hard work. So I had to discover how to trade in sync with the trend. Now this seems easy enough. Most people know this rule right off the bat, but they have a very difficult time trading in sync with the trend. First of all is because there are 1,000,001 ways to find out what the trend is. I'm sure if you go to different presentations or different seminars or read different books, everyone will have a different idea of how you find out and discern what the trend is. Now if we look at this chart right here, we see this is just a standard generic chart. Doesn't matter what the market is or time frame, but someone just off face value would say, well, this is really just a kind of a sideways chart. There's no trend at all in this chart. We're just basically just backing and filling, and we're in a range. So there's no trend at all. As you can see, we go back down, we go up, and then lower again. All right, so how can we find the trend? How do we get in sync? Well, there actually is a simple way, the way that was taught to me, and that's by simply applying the 50-period simple moving average. Those of you who attended my presentations before know this as the buy-sell line. This is extremely simple because the way we use it is we just simply plot a 50-period simple moving average onto all of our charts, regardless of what time frame or what market we're trading. So it doesn't matter if this is a 5-minute chart, an hourly chart, or a monthly chart. We're still going to plot a 50-period simple moving average. And the rule is if the majority price is above, then we'll only look for long setups. That's it. If price is below, we'll only look for shorting setups. It's that simple, but go back as a little homework assignment right now and look at your last 10, 20 trades. I can almost guarantee you the losers you had in your strategy that you're current trading or your method were because you were out of sync with this current market or whatever you're trading, but with this using this valuable tool. In other words, when price was above, you were trying to short, and when price was below, you're probably trying to buy. In fact, I had a trader friend of mine who I talked to just this morning, actually, and I asked him how he was trading, and he said he was getting killed in Krispy Kreme, KKD, because he was trying to short it, and it looked good for a couple of days this past week, but then it has been shooting upwards. And I said, well, where is price in relation to the 50-period simple moving average? And he says, well, it's above the 50-period simple moving average. I said, well, then you shouldn't be shorting it. You should only be looking to go long, because you're going to be basically swimming upstream if you don't apply this tool. I'm sure, every once in a while it will work, whereas you'll say, boy, Steve, the price was above the 50-period simple moving average. I wanted to short, it didn't, and it went straight down. Sure, it will happen every once in a while. But remember, we're looking for consistency in our trading. We're looking for high probability setups. And if you trade using this simple number 1 key here, being in sync with the trend with the 50-period simple moving average, you will have high probability setups. So this is the first key. Always trade in sync with the market using the 50-period simple moving average. All right, key number 2. Now that we know what the overall trend is, we want to look for a bar that closes in the top 25% of its range. Okay, why? Because the market is giving us a clue that that's the direction it wants to go. So if we look back at that same chart, now that we know that price is above, we want to look for bars that close in the top 25% of the range. Remember, we're looking for buy opportunities here, okay? And so these 3 bars right here, these are the bars that we would be interested in because they close in the top 25% of the range. Simple enough. Now we go to an entry method, key number 3, which is enter upon confirmation of trend. Well, what does that mean, confirmation of trend? Well, it's our confirmation method, which simply states to buy on the next bar only if price trades 1 to 5 ticks above the bar that closed in the top 25% of its range. Okay, so if we see a bar that closes in the top 25% and we're above the buy-sell line, the 50-period simple moving average, we want to go long on the next bar only if we trade above that bar 1 to 5 ticks, your discretion, on the very next bar. So let's look at these bars once again. In green, they close in the top 25% of their range. So if we look at the very first one here, well, here's where we'd go long, but we didn't get up that high in the next bar, so there's no signal there. How about this one right here? Well, we would go long here, and yes, this is where you would buy, and as you can see, you would enter right here, and the market went up for the next 3 to 5 bars, okay? Now, here's our last opportunity right here to enter. So you have to trade at this level on the very next bar, and you would enter it. Just barely made it. Remember, we're not concerned with where the bar closes. As you can see here, both times we traded there, we closed lower. That's okay. We're just concerned that intraday we went up to these high levels, 1 to 5 ticks above. And you had your entry, and you could see it was straight up. So we're in sync with the market, rule number 1. We're looking for bars that close in the top 25%, rule number 2, key number 2. And then key number 3 is we're entering if price trades 1 to 5 ticks above that bar that closed in the top 25%. That's it. How about sells? Well, we just reversed these rules. You must trade in sync with the trend, as we stated before. So this means now that we must trade to go short only if price is below the 50-period simple moving average. Once again, we look at this chart right here, this generic chart. Someone could say, well, there's no range, Steve, so I'm not going to do anything. The market's not telling me what it wants to do, so I'm just going to stay out of the market. We're going flat. We're sideways. Well, as you can see here, it kind of appears that way if we look on face value, but if we apply the 50-period simple moving average, price is below. So this means we should be looking for shorting setups, all right? We aren't in a range market. We're actually in an overall downward trend. Key number 2, we're going to look for a bar now that closes in the bottom 25% of its range. So if we look at the bars here, we see that these 4 colored in red close in their bottom 25% of the range. So these are the setup bars. And then lastly, we're going to enter upon confirmation of trend. And what does that mean again? Well, we're going to sell, and remember, on the next bar only, if price trades 1 to 5 ticks below the bar that closed in the bottom 25% of its range. So here are the 4 bars here. We look at this first example, and you see the first 4 examples, you would have actually gotten short the first 3, and nothing really much happened. In fact, if you had a tight stop, you may have even been stopped out. So we're not going to sit here and tell you that this is a foolproof type of technique here. There are other things that you need to take advantage of in terms of money management and stop losses and where to place those. But in this last one we see here, you would have entered once more, and then guess what? It's off to the races. So had you been stopped out, had you used a very tight stop, I should say, somewhere around here, or just above the bar where you entered, you would have been stopped out 2 or 3 times with some minor losses. But ultimately, you would have made everything back on this real nice consistent run here. And then if we look at this real nice run to the downside, you see that you had many more opportunities to enter once more because these bars all closed in the bottom 25%. So those are 3 very important elements that you can put together and add to your current strategy, or you can build a strategy based off of those because they're very high probability type of elements and components that will make a very profitable strategy. But we've put those together and we've formulated probably our most consistent strategy to date, which is strategy number 4. It's a great strategy. I personally trade it myself. I've been trading it for years, and even though I didn't share with you all of the rules, those are the main rules. There's roughly about 5 or 6 rules with strategy number 4. I just gave you 3 of them, which are extremely important, probably the most important rules of strategy number 4. In fact, let's go over the highlights of this particular strategy. Who is it for? Well, it's basically for all traders, from beginners to advanced. Our strategies are traded in over 50 countries around the world, and they are traded by literally hedge fund managers and by people that have been trading for a couple of weeks. So the rules are the exact same, whether you're trading in an office in downtown New York or whether you're trading out of your home office and you've been trading for a month or 2. It doesn't matter, okay? Now, we have ways to heighten your trading. We have ways to make it more aggressive or more conservative, but that comes with the class. Basically, strategy number 4 is for traders who are looking to catch quick momentum moves. Once again, we can alter this so that you can stay in the trade a lot longer if you'd like. But if you're trading the standard generic version, you're really in it for maybe anywhere from 2 to 5 or 8 bars tops. Its intensity level, from 1 being the least intense to 3 being the most, it's a 2. It's very moderate. It's right in the middle. And we only use 1 indicator. Okay, the buy-sell line, the 50-period simple moving average. That's all we're using. So we can't make it any more simpler than that. You can apply this to any time frame, any direction, and any market. All right. So if you're a Forex trader, if you're an intraday E-mini trader, if you like to trade stocks in your investment account or your portfolio, it doesn't matter. Okay, you can trade these for all those markets. Remember, our edge at specialist trading is consistency. A lot of these trades are extremely, extremely consistent, but I'm not going to sit here and tell you that each one works, but when you get stopped out using our basic stop loss method, you have very small losses, okay? So it all depends on what type of money management you want to use, which we teach you in class. We have many different ways. We offer up to 7 different stop placement levels, okay? All right, so let's look at some of these examples of actual signals in stocks. Let's start out with UPS. As we see here, we have the 50-period simple moving average. So what does this tell us? Key number 1, where is price in relation to the 50-period simple moving average? Price is above. So there's no way here at the beginning of October we were thinking of going short UPS. We wouldn't even consider going short UPS because price was above. So we look for these bars that close in the top 25%, and you can see we have 3 right here. So we want to go long on the next bar only if we traded at these levels. Well, we didn't here, and we didn't here. So these were setups, but they never got activated. But right here, roughly in the second week of October, we did trade above. We traded 1 to 5 ticks above UPS, the previous high in UPS. So we entered roughly about 90.5, and as you can see, what happened after that. Now remember, you can use the standard generic exit. Probably would have furnished you with a 2-point gain in roughly about a week, or you could have stayed in longer, and we teach you techniques on how to do that. How about IBM? Well, we have to go back to summer to see a stock that was going down as poorly as IBM, but we see here that we're below the 50-period simple moving average, so this qualifies for key number 1, meaning that we have to find and be in sync with the trend. So the trend is overall down, so we're only looking to go short. Then we look for bars that close in the bottom 25%, which are right here, and you would have entered short 1 to 5 ticks below. Now, even though IBM gapped lower, we went in short into the trade, and then look what happened. We get another signal right here with strategy number 4, gapped lower, but we still stayed in the trade. We still made some more points, and then ultimately another one. So in roughly the span of just about 1 month, you had 3 fantastic short trades in IBM, which are, each one would have guaranteed about 3 to 4 points minimum. Now, if you want to use this as a market indicator or some type of timing tool, you could apply it to the spiders or to an index just to see how well the market is going to be doing for the long term. And you look at a weekly chart of the spiders here, going all the way back to April of last year, we see that or April of this year, I'm sorry, we see that we had 4 really nice signals to go long. And why were we going long? Because on a weekly chart, we're above the 50-period simple moving average. I know a lot of people have been getting hurt trying to short this market, but if you look at it on a weekly basis, we've been above the 50-period simple moving average for some time now. So if you're looking at longer-term type of investments or trades, there's no reason in the world you would have been going short or looking to short the market, not until we have 2 or 3 consistent closes below the 50-period simple moving average. So these were all actual strategy number 4 buy signals, and you could have used them as short-term indicators to tell you which direction the market may be going on in the short term. And you can also apply this to intraday trading if you're a stock trader. Here's Microsoft. This was actually going into the 5th, which was yesterday. As we see here, price is well above on this 5-minute chart, above the 50-period simple moving average. So this means we're only looking for buy situations. Now, on the opening of the 5th, of yesterday's opening, we had a really nice strong up bar, and it closed in the top 25%. And so this was our indication to go long if we traded 1 to 5 ticks above. Our discretion. Some of our members like to enter when it trades only 1 tick above. Others like to wait at least 5 ticks. It's up to you. And then you can see what happened after that. You would have entered roughly about 36 and a few cents and made a nice half point in roughly about 15-20 minutes on intraday trading. So as you can see, this works if you're position trading or if you're intraday trading. Now let's look at the E-mini S&P. All right, most of the E-mini traders are intraday traders. So let's look at a 10-minute chart. This was on the 4th. This was Monday. Now if we see here, we know right off the bat that we're only looking to go long. We weren't even going to consider for the entire day going short the E-mini until it closed a couple of bars below this 50-period simple moving average, which it never did. So we never looked to go short the E-mini on Monday. All right. So we look for setups using all the rules with strategy number 4, which applied all of these 3 key elements we talked about. And these were our buy setups for that day. Here was one to go long. You had a nice run up of 2 or 3 points. Here was another one. And then on the close, right into the close of the day, another setup. See how simple it is? 10-minute chart. We're only using about 5 or 6 rules, and we're only using one indicator. How about a 3,000 tick bar chart? This was on the 5th. This was actually yesterday. As you can see, for the first part of the day, we were below the buy-sell line. So we're looking for all the rules that meet strategy number 4, shorting signal, which was right here. You could have shorted around 1755 and ridden it all the way down 4 points, 3 or 4 points if you wanted to. Now, once we had consecutive closes above the 50-period simple moving average, now we're only looking for buy setups. We're no longer even considering going short. And then here's where we had 2 setups to go long later on in the day, which could have gained a couple of points or so in the E-mini. As we stated, this is mainly for intraday traders. I mean, we've shown you signals, but we can also apply this for daily bars. If we go back to the middle of October, once again, we see that price was kind of oscillating either above and below. So at this point, we really didn't have a clear trend. And once you see us close at least 1 or 2 times above, that's your signal to go long. Now, usually we like to wait for 2 signals above, but we felt very confident this was a very nice signal with this one close above, since we had this nice gap opening. So it was telling us that there was a lot of strength to buy the E-mini on a daily basis. So we use this for a strategy number 4 signal, which all of our members were alerted to the night before, to enter if we traded 1 tick above. And as you can see, you could have entered and ridden it all the way up into the beginning of November if you'd like. All right, how about if you trade the Forex? I know we have some Forex traders in here, so let's see how this applies to the Forex markets. Well, we're not even going to change the rules at all. We see here that we have the euro-dollar. This is a daily bar of the euro-dollar coming into the end of October, beginning of November. For all intents and purposes, we're above the 50-period simple moving average, so we're only looking for buy setups. And these were all the buy setups where you could have entered to go long the euro-dollar. Now, I know it doesn't look like a lot, but for those of you people who don't trade the euro-dollar or Forex markets, this small little gain here is roughly $1,000 per lot. So these were nice. This wasn't much of a, in fact, this probably would have turned out to be a loser, this third signal right here, but you would have made it back and more had you stayed in for this and this winner and this winner. How about the Australian dollar? Well, we're obviously below the 50-period simple moving average, so strategy number 4 generated all of these sell signals all along the way, which were all turning out to be winners. Why? Because we're in sync with the trend, key number 1. We're looking for bars that close in the bottom 25%, which all of these did, and then ultimately we're entering when we trade 1 to 5 pips below. All right, so let's recap. Remember, key number 1, always be in sync with the trend. Everyone knows this. I'm sure you've read books, you've gone to presentations, webinars. Everyone says the same thing. The reason why it's so difficult is because everyone has a different idea of what the trend is. Either they have some idea of indicators that should cross over, or some type of higher time frame to determine and to validate the lower time frame. We say if you're looking for the overall trend, just stick with the chart you're looking at. If you're looking at a 5-minute time frame, that's all you're concerned with. And just apply the 50-period simple moving average. If price is above, you'll only be looking for buy setups. Doesn't mean if price is above, you buy at the market. It means you look for a buy setup. You need some structure to find first. If price is below, you look for a sell setup. Okay? Now, once you see what the overall trend is, then you look for a particular bar pattern. This will help you define the setup. And if we're looking for buys, we want to see a bar that closes in the top 25% of its range. If we're looking to go short, we want to see bars closing in the bottom 25. Why? Because when bars close either at the top or at the bottom of their range, it's the market giving you a tremendous clue as to which direction it wants to go in the short term. So that's a tremendous clue that the market is giving you. So why not just jump on board if it trades above? Okay? And that's our last key. Once you see these bars that either close in the top or 25% of the range, enter if you trade 1 to 5 ticks above or below on the next bar. Okay? These are the rules. All of these rules are employed, and they're all part of strategy number 4, which we shared with you today. Now, strategy number 4 isn't just keys 1, 2, and 3. There are also a couple of more keys involved with this, okay? So there is some studying, probably about a week or two, so that you can understand and see what this actual strategy is when you can see it for face value. And one of the best ways to learn is to have a scanner. Now, we know that most of the platforms out there do provide scanning, and so it's very simple. Once we provide you with the code for strategy number 4 as a member of Specialist Trading, you can now apply the scanning process. Let me show you how I scan for strategy number 4 signals, looking at them at daily bars. Now, we're just taking Metastock as an example here, but you can do this just about on any platform you have as well, as long as you have the code for strategy number 4. Metastock, you would simply go to where this arrow is here and hit the icon, which is the Explorer for Metastock, and it will prompt you to this window here where it has a list of all the different strategies, and we have Pro Trader strategy number 4, okay? And you'll simply hit the next button, and what that will do is now prompt you to which market you want to apply it to. So we've applied it to the NASDAQ market here, and then it will furnish you with a list of current signals. Now, we just took one that we had in the last couple of days, which was Huron, or HURN, okay? As you see here, it's long, it furnished a buy signal. So if we go and look at the chart, HURN, on a daily time frame, we see that we're obviously above the 50-period simple moving average. And because you now have the add-on, it generates an automatic up arrow when the signal is generated. This bar right here, along with all the other rules, qualifies for a valid strategy number 4 setup. But remember, we cannot go long unless we trade 1 to 5 ticks above. So we see on the very next bar, we went even higher. So this signal, as of the last couple of days, was working out fine. At the very least, you could have taken a point profit out of this and moved your stop to unchanged. So this was HURN, and this is the way you would scan for signals using Metastock. With TradeStation, they also have a scanner as well. With Ninja Trader as well. There's a lot of different platforms that we apply for MT4, so you can use all of their scanning properties to apply to this once you have the code for strategy number 4. This is a great way to learn. It's a great way to see what the stocks are and the E-mini setups are on a nightly basis, as well as Forex. If I can just take a last couple of moments here before we go into the questions and answers, this is what we would like to offer you today. We're running a great discount on strategy number 4. We just showed you how well it works and all the different markets and all the different time frames. And as you can see here, we have it discounted tremendously. At $6.95, it's a tremendous inexpensive price, but we've discounted it even more, down $200, down to $4.95 for all the people attending today. And this comes with the instant course access, so that you don't have to wait for anything to be shipped or mailed to you. You can be seeing all the rules and learning as early as today if you'd like. Detailed online instruction, 5 videos altogether. We teach you all the entries, all the exits, and all the stop placement. Okay, so these are the other important pieces of the puzzle involved in strategy number 4. We also furnish you with signal alerts. Now, you can see these on a nightly basis when we provide them for you through our email alerts, but you can also see them with the free add-on that we provide, so that you can do a scan and see the signal alerts. And also, this works intraday as well. You'll see the buy and sell arrows generated intraday. We also furnish you with weekly video trading lessons that we have online. And then lastly, once again, you have the free add-on, which comes with whatever platform you're using. This also applies with the signal scanner, so you can apply the add-on and then use the signal scanner to search for any nightly signals. And then you'll get my personal email address, so you can contact me. I was answering emails this morning with people with strategy number 4 who are interested in getting my ideas and seeing if a valid setup was. In fact, someone was asking about a valid setup in the QQQs, and I answered it for him and said, yes, it was. It was a setup to go long last night in the QQQ, so you would have been long going in today. Okay, and remember, this is a great price at $6.95. We're discounting it even more for a limited time only, though, down to $4.95. You get all this included, plus the free add-on, the ability to scan for signals on a nightly basis, and my personal email address. So, if you happen to have any questions, go to our sister site, which is protraderstrategies.com. They are promoting and are selling all of our individual strategies, as I just mentioned to you today, strategy number 4 and some other strategies. As well, you can contact them at trading@protraderstrategies.com or call any of the trading representatives at 310-598-6677, and they will answer any question that you happen to have. Now I'm going to go into the question and answer portion of this presentation, and the first thing I want to say is, because I know most people ask this, is this being recorded? Yes, this is being recorded. The second most important question that most people ask is they always want to know about numbers in terms of win-loss ratio. What's the percentage of wins versus loss? What's the average daily gain? Please remember that the title of this strategy that we have is strategy number 4. It's not system number 4. And the difference is that strategies are not like systems in that a system means you have to do the exact same thing each and every time. In other words, there are no variables regardless of what the market conditions are, or if it's a choppy market, straight up or straight down market. You have to follow the same rules each and every time. It doesn't matter if you've had 10 losses in a row or 10 wins in a row. You do the same thing. With strategies, they are 70% rule-based, but 30% discretionary. So because of this discretionary factor, which you can either make the strategy more conservative or more aggressive, use different entry points, use different exit points, there's no way to actually come up with statistics or numbers because it's not a system, it's a strategy. You can virtually trade them 1,000,001 ways. So because of that, I'm sure people are going to ask, we don't have records of how well it works. All I can tell you is that I personally have been trading this for over 25 years, and it has stood the test of time. Are there going to be losers every once in a while? Sure. But I think if you do a Google search and see some of the people who have purchased strategy number 4 in some of the chat rooms or message boards, you'll see that there's really not a lot of negative feedback about it at all. A lot of people are happy with strategy number 4. And most of the people who use it, as I stated, are anywhere from beginners to people that just started to hedge fund managers. We have some hedge fund managers that are trading this as well. So no statistics with a strategy because a strategy has discretion involved. Remember I said to purchase 1 to 5 ticks above, well, that's your own discretion. Just by that one small little iota alone would change numbers tremendously. You know, if you purchased it up 2 ticks, if you purchased it up 5 ticks, the numbers are all going to be skewed. So we're not a statistical company. As I stated in the very beginning, we are an educational company. So we're all about teaching you how to trade with the specialist edge. Okay? So let's go on to the questions. Let me see here. BC is asking, does it apply to the FX? Yes, it does. I don't know if you came in late, but yes, I showed you some great examples. If you were thinking about purchasing the Australian dollar this past couple of months, you really would have gotten hurt. But had you had strategy number 4, you would have had probably about 8 or 9 winners in a row. So yes, it works tremendously on the FX markets. Jack is asking, what is the bottom or top 25% of what? In other words, we said in the top or bottom 25% of its range. So if you're looking at, let's say, a stock, and the range for that day is, let's say, 1 point. Okay, the high is 50 and the low is 49. Well, you want to see that the bar closes in the top 25%, in the top 75 cents, okay, of that, or I should say the top 25 cents of that. You want to see the bar close in the bottom 25 cents of that if you're looking to go short. So whatever bar you're looking at, look for the ones that close in the entire, if you take the entire range from top to bottom, look for the ones that close either in the top 25% or the bottom 25%, okay? What else do we have here? Some people came in late. Is this being recorded? Yes, it is being recorded. People are asking, Chris asks, where do you exit? Well, Chris, that's what comes with the rules. That's part of the rules. We have a number of different ways to exit. Either you can exit aggressively, or you can exit and just use the standard generic exit. But it wouldn't be fair for the people that paid nearly $700 to give away all the rules today for strategy number 4, because then there would be no reason for you to purchase it. We want you to purchase it in good faith and to become a member, and so you can get my personal mentoring along with your purchase of the price, okay? Alexander asks, is the 25% range the highest, the height of the candle from the low to high? Yes, when I say the range, or the 25%, we're only talking about the high and the low, the extreme high and the extreme low. Don't get too caught up in candles where you get concerned with the opening and the close. This is not a candlestick type of strategy. We're only concerned with where the high is, the highest of the high of that day, and the lowest low of that bar. That's it, okay? And then you figure out what the 25% is of that particular range. Let me see. The next question is the 50 simple moving average the same as the 50? Yes. The 50 MA is the same as the 50 SMA. In other words, we're looking for a simple moving average. But remember, even this isn't written in stone. This is why we can't quantify this with statistics, because a lot of our members like to use different settings. Some will like to use a Fibonacci number like a 44 simple moving average, okay? Or some would like to use something maybe like a 62, and that's fine. Really, what's really important is the concept. In other words, if price is above the moving average, whichever you decide to use, you should only be looking to go long. That's it. And if price is below, you should only be looking to go short. In other words, there's nothing magical about the 50-period simple moving average. The only reason why I use it and I teach it so strongly is because over time, I've seen that this particular level seems to work the best in all time frames. If I'm looking at a weekly chart or if I'm looking at a tick chart, it works the best in all time frames over time, okay? Now, sometimes a 20-period moving average will work great on an intraday chart, but if you look at a weekly chart, it doesn't apply at all, okay? It's out of sync. So that's why I always stick to the 50-period moving average, because it transfers over so well into different markets and different time frames. Would this technique work on using Renko or range bars? That's a good question, So I haven't applied it to Renko, but I have used it with range bars, and yes, it does. It works fine in range bars. In fact, I was looking, I almost got long a signal today on a range bar, which was I believe it was a 4-point range bar on the Emini. So yes, it does. It works fine. Let's see here. Next question. Will there be a recording? Yes, there is. Once again, if you want to be provided with a link to the recording, just kindly email us at trading@protraderstrategies.com or give us a call, and we will supply you with all that information to get the recording. Jillian is asking, it seems then that you don't consider the trend of the broad market, only the trend of the stock and the time frame you're looking at. Yes? Well, yes, and that is the broad market. In other words, the 50-period simple moving average is looking at the overall broad trend, okay? I think what you're stating is we don't look at higher time frames to confirm or validate the lower time frame, okay? Now, I don't teach that, but we have a number of students, a number of members who use this technique where they'll look at a daily bar to decide what to do on the smaller time frame, okay? And once they get those two time frames in sync, that's what they decide as the trend. So if the price is above on the daily bar, they wait to see that price is above, let's say, on an hourly time frame, and then they'll decide to go long using strategy number 4. And that's fine. I personally don't use that technique because I tend to miss a lot of trades when I do that, and I've seen no real consistency with that. And I know a lot of people swear by it, and that's fine. We're not in any way altering the rules if you want to use that. This is once again where your discretion comes in. If you want to use a higher time frame to denote what the smaller time frame is, they have to both be in sync, well, that's okay. This is another way to use it. That's why we can't test these 1,000,001 ways in which to trade strategy number 4. I personally, if I'm trading a tick chart or a weekly chart, I only look at the chart I'm trading with the 50-period simple moving average. That is the broad overall trend. Okay? So Charles asks, so what if the daily signal occurs but in conflict with the weekly signal under? Once again, I'm not concerned with what another time frame is doing. If I get a daily signal, I'm not concerned with the weekly or what the monthly is doing. Remember, this will keep you out of a lot of trades, and I've noticed that it keeps me out of a lot of winning trades because I was waiting for the higher time frame to confirm the lower time frame and vice versa. If you want to apply that, that's great. You can wait for both of them to be in sync. But I would rather just use the broad market from one chart at a time. Steve, you have a few tools. Which is the best one to buy? Well, Danny, that's a very subjective type of answer. I would, it all depends on how long you've been trading and what you're looking for. But in my personal opinion, I've discussed this with our other members, our operations manager at Specialist Trading and Pro Trader Strategies, that we have found, and that's why we put it in this title of this presentation, the most consistency happens to be found with Strategy 4 because it applies to every market. So if you're looking for a really consistent, very simple strategy to apply, Strategy 4 is a way to go. But remember, once again, this is really subjective. Maybe you're a FX trader. Maybe you're an intraday trader and you just want to focus something on that's going to capture quick tick moves? It all depends. It'd probably be best to call up or to speak to one of our trade representatives. They can steer you in the right direction. Charles also asked, do you use volume or Intermarket to filter any trades for number 4? No. Once again, remember we said we want to keep things as simple as possible, and when you start adding all these other things, you start complicating, and plus you start second-guessing yourself. Remember, when I first started trading, I had a difficult time making money, and why? Because my trading was tremendously complicated. I was really just using a ton of indicators. I was using volume. I was looking at news, and everything had to be perfectly in sync in order for me to go long or short. And then when I did, I would second guess myself many times. So the reason we try to keep things simple is because we want to get all these other things out of the way. Okay, and if you can do that, you'll really get onto that road to consistency much, much better. Okay. Okay, what else do we have here? BC is asking, do we need to download the scanner? Well, no. If you have Metastock, that automatically comes with it. I know also TradeStation and NinjaTraders have their own scanner, so it all depends on what platform you have. But most platforms have their own scanners, but you need to input the code, and that's what you get with the Strategy 4 course. For this great discount you're getting, you're going to get that code so that it automatically processes that for you so that you can see in the scanner where the setups are. Okay. Charles was asking about the 50-period moving average. Well, I think I answered that. I think the reason why it's so important is because it transfers over in the markets, the other markets, so greatly. Okay. Yes, we have targets in our strategy. In fact, we have a number of targets. We have ways to exit the strategy with the target. We also have ways to stay in the trade much longer, but this all comes with the course, okay? Once again, Danny is asking, there are a few strategies. Which one would you recommend? This is very subjective. I'm sorry. I would have to speak to you, or one of our trade representatives would have to speak to you. But overall, if you're a trader that just wants an overall approach, that's something that's very sound, that I personally trade on a daily basis, I would stick with Strategy 4. That's, once again, our most consistent strategy. Charles is asking, do you take into account gaps, true range if the stock gaps? Yes, we teach you that, and I can share that with you. You know that you're going to be purchasing on the next bar if it trades 1 to 2 ticks above, and if you're trading stocks, many times you'll have gap openings. So this is something why we should tell all of our students to paper trade for a while, and you can decide what your risk tolerance is. If you see that a stock gaps open 2 points, well, that may be a little bit too much for you to take, and maybe that may be the point where you wanted to exit. Maybe that might be one of your exit points. So you don't want to enter where you're going to be exiting. So it's up to you. This is, once again, the discretionary process, which we help you along, which we give you tips on what to look for and what to stay in and what to stay out of. Okay. BC is saying, how do we order? Well, just kindly contact, if you're really interested in taking your trading to the next level, contact the people at trading@protraderstrategies.com or call that phone number right there, and they will hook you up with the discount. But you have to contact them in order to get that discount, okay? I want you to get that because you attended the presentation. Let's see, some more questions here. Are they the same thing? Yes, they are. Do you look at the trading volume? No, we don't, once again. By the broad market, Jillian is asking, I mean the spiders or QQQs, looking at their direction to determine the direction of your stock. Do you consider what the indexes are doing? Well, that's a great question, Jillian. The main way I look at what the indexes are doing is if I showed you on that weekly time frame. Now, if I get a buy signal in, say, an index using strategy number 4, that's going to be my signal that, well, I can, if the market is going up, if the broad market is going up, well, then most likely if I get a signal in a stock, it's going to be going up as well, or maybe the E-mini will be going up. So yes, what I look for are strategy number 4 signals, and like say the spiders or the E-mini S&P daily chart or the index, the S&P index. And then if I see that I have a buy signal in the index, well then most likely the stocks that make up that index are going to be going up as well. So it's a great tool to use either way. And yes, as you saw, it works great on the Forex markets as well. Tony says, today the E-mini reversed at 10:10 a.m., way above the 50-period simple moving average, basically erasing all the gains from the opening. What would you have done in this situation? Well, once again, it depends on where the signal was. We teach you ways by certain ways for money management, if you get to a certain proprietary point to move your stop to unchanged. You can do that. Or if you're using a specific stop level, to move it to another stop level. So you can protect yourself. So many times, some of the best trades are the ones you get stopped out unchanged. So also, it depends on where you would have gotten in. Many times you would have exited before the market turned around. So it all depends. I personally, have to look at the time frame. You're saying it changed at 10:10, but are we looking at 5-minute charts? Are we looking at an hourly chart? Okay, so I personally was looking at a tick chart when I was trading today, and I made money being long today before it reversed. So I didn't get hurt by that at all. So it all depends. Once again, on the time frame, it depends on what strategy you're trading. It depends on where your stop loss is. It depends on your parameters for, being either conservative or aggressive. And this is what we teach you in class. This is why a lot of our students say it's more like a mentorship than it is like just simply being thrown to the wolves and here are the rules and we'll see you later. So I'm there with you every step of the way, and we're pretty much configuring the strategy to meet your needs. So if you're conservative, we want you to move your stop to unchanged. If you're aggressive, well, you'll stay in there for a little bit longer. Maybe you'll be able to catch more gains. All right. Mike asks, he says, I have the course. Where is the code? Well, Mike, I would say contact. You should have been getting the code, or it depends on what platform you have, but you should contact them and they will send that code to you. Okay, Mike? Let me see, we have time for just a few more questions here. How do you measure the ticks on stocks? Well, basically, a tick is just 1 cent above. In other words, if the high of the range of that day is 50, well, 50.01 is 1 tick. 50.02 is 2 ticks. So you can measure that and say, well, I'm going to enter 2 ticks above. So that would be once it traded at 50.02. Okay? And it's the same with the E-mini. The E-mini moves in increments of 25 cents. So let's just say, to make it simple, if the E-mini closed at 1500, well, 1 tick above would be 1500.25. 2 ticks would be 1500.50. Okay, so that's basically, it's just the increment. It's just the single smallest increment of the particular market you're trading. Okay, I think we're just about to the end of the course here. I want to thank you so much for attending. Please remember, if you're serious about taking your trading to the next level, and by level I mean consistency, because I don't know what other presenters do in their presentations or webinars, but I'm not going to promise you that you're going to become a millionaire in 2 weeks. That's not the way we do things at Specialist Trading. What we do try to promise you is that our goal is to get you on that road to being consistent. And that's what we're trying to do. This is one of the strategies that got me on my way to being consistent. So this is what I'm trying to share with you, okay? This strategy works for stocks. It works for the E-mini markets as well as Forex. And some people as well, we have members that try it on commodities as well. They've tried it for coffee. They've used it for gold. They've used it for oil. So it really transfers over into all markets and all time frames. It's extremely consistent, extremely simple, and it's such an inexpensive strategy at $6.95, and we've reduced it even more down to $4.95. So if you're really interested in trading a strategy that is consistent and simple to use, that has a code that will generate buy and sell arrows as well, and that will have a 37-year professional being there with you every step of the way, please purchase. Now is the time to purchase at this great price, strategy number 4. Okay. Now the link is posted in the chat box so that they can use to get a discount. If you don't want to speak to anyone, you can use this link that's in the chat box to your right in the little box that you have there for GoToMeeting, so you can see it right there, and it'll automatically take you where to sign up, so you can click on that and get signed up right away and start learning right away, and emailing me as well with any questions you may have. Thank you so much for attending. I really appreciate it. Thank you for coming to our classes. Each week, as I'm sure you've seen, we try to present you with something that you can use. Now, I gave you the 3 keys that you can apply to any strategy that you're currently using, and even if you just apply those, I promise that you'll really start to see better results with your trading. But it's strategy number 4 that incorporates everything all together. So if you want to get the full meaning of everything with those 3 keys, purchase strategy number 4 at these discounted prices, and I think you'll really start to see really dramatic changes in your trading. I want to thank you so much for attending once again. I look forward to you purchasing strategy number 4, and I look forward to all of you becoming members of Specialist Trading. Thank you so much. We'll see you next time. Bye-bye.